Good morning, good afternoon, wherever you are. Just remember, whether the market is low or high, stay informed with the mortgage guy. All right, we're going to go ahead and jump right into it here. So, found some key bits of information that I really wanted to share with you. I feel they're very pertinent to what is going on right now in the near future as well, as far as it goes for real estate, and even some key bits of information that we could utilize as far as some distant forecasting. Just remember, I'm giving this information to you for you to be able to come up with your own determination, your own opinion of what is happening right now into the near future. And then always consider, make sure you have something lingering in the back of your mind about what is happening in the distant future for you to scale your business so that you can make sure that you are conforming and adapting to what is going to happen as far as it comes to your industry, which again, this is real estate. So as far as real estate goes, make sure to keep yourself in the loop by listening to me or doing your own research and understanding, again, what is happening as well as now and into the future of real estate so that, again, your business can be scaled accordingly. Because let's just be honest, if we don't ever conform, well, our business will continue to go down, or it will go down because we are not adapting, just like any sort of industry or any sort of business always has innovations, it has reforms, and over the course of time, it changes, it molds, takes new shapes, and you have to change with it if you're going to improve. So we always want to grow, we want to improve, so that way our business not just stays afloat, but we can grow further and further. Also, just you always want to be the industry expert. So being that industry expert, don't just listen to me, listen to other people, do your own research, but make sure that they are vetted or they are getting information from vetted sources and relaying it to you just like I am doing, okay? So now we're gonna go ahead and talk about China. And when I go over China, I'll go over some key factors. And then after that, I'll relate it to how it all pertains into what we're going over today. So the first thing in China is real estate. So it looks to be pretty evident at this point that they are having a real estate crash. They could be in the midst of one at the moment. The key metric that we are using is home values. Over the past 11 months, we have seen a decrease in home values. As far as the GDP goes, this is the first time that they will not meet their GDP growth numbers. The last time was 1998, and they only saw a 0.2% decrease. They're also pulling out of US economic markets, out of commodities, which they are a major buyer in, and their bond market is tanking rapidly. When it comes to lending, month over month, they've had an 85% decrease. There is evidence that they could be seeing some currency devaluation. The Chinese yuan is pegged to the US dollar, buying commodities becomes more expensive, and each yuan now buys less commodities as international markets become more expensive. All of these key points tie to inflation. So if you're pulling out of commodities because they're more expensive, well, that's a cause of inflation. So just keep that in mind. Now, with all of these factors that we have gone over, these are common themes in the world markets. This is not just a theme for China. So each country will see some differences, some variations, but for the most part, most of these themes are pretty common. We are seeing people pull out of markets, pull out of commodities. Bond markets are tanking. Lending has decreased. Home values do continue to rise in most places, but will they also continue to decrease over time? I don't know, but we shall see. Let's consider the media next. So when we consider the media, the key point I want to go over is when are companies, real estate companies, going on media? So this is what I would call a old school sales 101 tactic, okay? If you're ever going to have a representative, especially a CEO or higher up in a real estate company, go onto a media channel, they only go on when they're required. And when they go on, it can only be for one thing. If times are prosperous, why would they go on? Why would they waste their time to put them on the media if things are going well? Well, they're only going to go on if times are hurting. So if times are hurting, they're going to go ahead and get on there. They're going to talk about their business to influence others for profit or the consumer. And they're going to typically bring a market-related approach, keep it about data, and then use that data to their advantage. Such as, right now, home values are going up, interest rates are high, but with home values going up, we expect them to continue to increase based on insider information that we have or certain key bits of data. So if the home values continue to increase and you buy a home now, you will have more equity in the future. So buy a home now because now's the key opportune time. This is the same thing that we saw in 2020, even in 2021. So whenever a CEO, higher up, or any real estate company brings someone onto a media channel, your ears should be perking up, because what they're doing is they're going to give you their market-related information or data, use it to their advantage, and then end with their opinion or their so-called outlook, because that's the last thing that a listener will hear. And being of especially a higher up or CEO or someone in the company that is speaking, you're going to give them more weight to what they're saying, and you're going to hold that as credible. But the key thing is that company in need, or is there an overall market need? If the company is in need, well, they're trying to influence you to use their company. Ideally, again, we would look at this market and say this is clear as day that this is an overall market need. So 85% of mortgage applications are down. As far as refinances go, 19% are down on the purchase side. So when you see that, you see less people buying. Clear indications of that. On the overall world economy, we see the same thing. So if we're constantly seeing that everywhere, just keep in mind, let's say from a mortgage perspective, if a CEO goes on to a media channel and they're going on to talk about the market and data and to bolster up their business or whatever it is they need to get on there for influencing purposes, well, if that information would help other companies thrive, well, ideally it's going to help our company thrive as well. So if that person gets on there, they're trying to stimulate or help the overall growth of their business, but also their industry. So there's an industry focus or there's a company focus. And this time you're going to see more industry focused information versus company focused, because there may be companies in need, but all companies are in need when it comes to real estate. So again, that information, if it helps the industry overall, it's going to help their business. So just keep that in mind. So our ears should perk up because it means that there is a need that is currently among us for their business. And that is pretty much anywhere when it comes to real estate. Now, some thoughts to consider. So the trending thought is, with the low rates and increasing values amidst COVID, there's a few things that are suggested. So first one we're going to talk about with COVID is the idea of working from home. So if you're working from home, you want to have a better work home living environment. So if you're going to improve your environment, what do? You move or you renovate. I fully believe the renovation product is going to be one of the next big things. There's going to be a boom in renovation products once the population understands it more. But outside of that, when it comes again to improving the living environment, why not move to be able to have more of what I would want to be surrounded with in work? Next thing would be more time at home. So if you're spending more time at home, again, you want your living environment to be more catered to what you want, but also there was a lot more babies that were produced in COVID. So if we have a growing household, we have more time for childcare, so less time that we have to send our kids over to a facility or wherever it is that like a daycare, then we get to save that money. So why not improve our home? Again, this all revolves around improving home. The next topic is free money. So through COVID, they printed out free money. Also, some industries saw better pay, which means there's a budget increase. So with that budget increase, we can afford to buy more home. And that ties in with the next one, which is lower rates. So with lower rates, you're able to buy more home for an affordable payment. So let's say you were in a $200,000 home and your payment was $1,400. Well, in 2021, you may have also been able to buy a $320,000 home and still have a payment of $1,400. It would depend on your rate, but rates did make homes a lot more affordable. Or maybe you're willing to stretch your budget just that little bit more to buy enough home to fulfill all of your criteria, such as better work environment, better home environment, and more room for childcare and also a growing family. The next thing we'll talk about is lower down payment assistance or lower down payment awareness. People today have information at their fingertips on their phones. So if we consider the fact that people today now understand you do not need to have 20% down. Not everyone understands that, but a lot of people now understand that versus, heck, just 5 years ago. Well, the more money saved in these prosperous times, they now can consider investment strategies that they never thought possible. So now that there's more wealth, we can now start talking about other investment products. Obviously, real estate is a big one. So with real estate, why not put down the least amount down, 3 to 5%, and then we'll park the rest of our cash that we saved into an investment vehicle and earn 6 to 10%. Well, that's a smart and wise investment strategy. You're borrowing cheap money to earn more in interest over the course of time. And over the course of time, with that compounding interest, that could go ahead and actually end up paying for the mortgage itself. And then the last thing was values increasing. So the idea of moving to gain more equity or profit for yourself has become a key contributor to a lot of investment companies, real estate investment companies, coming in to purchase homes in 2019, 20, and 2021, even in the early part of 2022. There's a lot of cash offers. Why? Because, heck, you could either keep your current home and buy a new home if you were just a standard consumer, rent out your new home, buy whatever new home you're buying. If your values are increasing, someone's paying for your other mortgage, heck, in the matter of 5 to 10 years, you might be able to sell your home and make $100,000 to $150,000. Why not do that? The other idea is that you could go ahead and purchase multiple investment properties. And while those mortgages are all getting paid for by renters, you can charge premium rent because rent is increasing on average across the country or even across the world, but also your value is increasing. So at that point, your profit becomes exponential. Now, the other side to this is, why would someone buy now? We talk about, obviously, values are still increasing and they're on that trend. So if values are increasing, yes, rates are increasing, but what is the only one reason at the moment? Well, there would only be actually 2 reasons I actually see. I should have said what would be the 2 reasons. So the first one would be cash out. So with that equity, people would be able to be debt free. Now, you'd still have a mortgage, and it's still a mortgage with cheap lending interest rates. But you would be able to go ahead and, let's say you made $100,000 on your home and you paid off $1,000 a month in debt. You go to buy a new home, and let's say your payment on your mortgage increases $800. Well, you're saving $200 a month. And then when rates go back down, because they will, then you'll be able to go ahead and save even more per month. You can kind of use it as a debt consolidation tactic. So that would be one way. The next way would be renovation. If you find a home that hasn't been able to sell, and let's say it's a rural property or whatever it may be, it just hasn't been able to sell because of quality, condition, or whatever, you can go ahead and buy that home, do the renovation product, go ahead and renovate the property, make it up to your own standards, and then you're now in a property, you got a deal on it, and you have it the exact way that you want it. So those would be 2 key areas, because with the home values increasing, you can get the property for pretty cheap, it hasn't sold, and then you can do your improvements, which will meet the value that is needed with the property improvements. But the question that we must ask ourselves is, without home values increasing, what is the real reason for so many people moving? Is it just because of COVID and some of those factors that I gave above? Or is it more of a profit-based decision? A profit-based decision. So it just depends. But there's a lot of indications that say it was more of the profit side. So with that being said, come up with your own opinion or your own determination. We're going to go ahead and move down more to the world markets again. And we're going to start here in New Zealand. In New Zealand, home prices have increased 46%. Now, we're going to talk about the median multiple. So what that is basically you're just taking the median price and taking that over the median income and seeing how much of an increase or decrease that is. We are seeing a 110% increase, or times 10 median multiple. Okay. So that means when it comes to affordability in New Zealand, with home prices increasing by 46%, homes at this point are now hitting a level where they are no longer, or shortly to be no longer, affordable. If we looked at Canada, we saw a 50% increase, and the multiple had increased by 17, or 117% increase. Again, we are seeing where home values are taking homes to a point where they are no longer affordable. People may have saved up money. Who knows where all this cash came from, where people were able to pay cash for their homes. But we are seeing a point when just, it doesn't matter how much money you decide you want to put down, things are just not affordable. This is a world market scale, again, that we're talking about. But with these home value increases, there is a point where they have to taper off. Because if they are not affordable, people are not going to buy them. And if people are not buying homes, economies will shut down. So let's look to variable rates. These have been coming back, and they're still prevalent in other countries. When you do a variable rate loan, the cost for that loan is going to be higher. Also, you look at the overall payment costs that are associated with it are also higher as well. They are just more expensive. And that gives us indications of potential default in the future, like back in 2008. Now, in the US, we're still not seeing a lot of variable rate loans. There are some in the jumbo sector, which would be more than the average consumer sector. But when it comes to variable rate loans, again, in the US, we are way more regulated than we ever were in 2008. There's no bad lending with your standard Fannie, Freddie, FHA, VA, USDA loans, even most of the non-QM. But we do see hard money lending. So hopefully the hard money lending is not going to cause many to hit a default. Again, that is a slim portion of the actual economy that we are seeing. In world markets, though, we do see a lot more variable rate loans. So why they haven't transitioned over to the fixed, I'm not sure. But that does give indications that there should be a higher rate of default over the next 5 to 10 years. Next thing is harder for new homeowners to purchase. So as far as new homeowners goes, with mortgages becoming more expensive because home values are becoming more expensive, it is harder for a new homeowner to get into the market. So in order for a homeowner to get into the market, they have to have enough saved up. They have to have their budget also meet the demand. So if their budget is not going to have that substantial increase from when they, if they go to apply today, which is why we're seeing a lot of people who qualified all the way until mid to early 2022 no longer qualify now and are kind of just sitting on the backside, just waiting for rates to go down. These people, are waiting to buy homes, but they're being forced to pay rent. Why? Because their budgets don't meet it. So if income isn't increasing enough to meet the home value price increase, then you're going to see where, again, less mortgages are going to be done and less home purchases are going to be done. So what do people have to do? Well, they have to wait. And if they're going to wait, what's going to happen to the economy? That's less money being poured into the economy. So typically at that point, you would see government intervention because we need more money. I will get into that in a little bit. When we go into global supply chains with inflation, again, things are just more expensive. So that means interest rates will be affected all over the world. We're then going to economy crashes. And again, most of these economies that we're seeing in world economies on the world spectrum, most of them are at the brink of potential crashes, which again, you can only thrive for so long. And then there's a point when you have to let either things fail or you have to see some sort of pullback, which is natural in an economy. And a lot of people think that when it comes to an economy, if there's a pullback, it's the worst thing in the world. It's a major crash. And oh, shoot, what do we do? But these are natural occurrences, and these are natural cycles of an economy. Again, you can only have a bull market or a thriving market for so long, and then there has to be some sort of devaluation or a period where there's essentially, we can call it rest. Then we're going to go into a little bit about housing. We do see 6 to 70% of the average world wealth in the world comes from housing. So 60%, 60 to 70% of wealth on average comes from housing in the world. There you go. It's a better way to put it. So that means most people's money is in housing. And so if we see a crash or values substantially decrease, that amount of savings that people actually have is going to diminish whatever they have or whatever we are counting as far as savings goes. So we don't want people's savings to just be gone or their equity to just be gone. So there are other key contributors to that, but we will factor that as, hey, the government's probably going to need to step in. And we're going to see that across all world markets. Is the government going to intervene? And when are they going to intervene? It seems like that time is coming sooner than later. Then we go to the debt and savings rate curves. So debt costs have been down basically due to more strict guidelines, at least in the US. So in the US, your average credit score that you need to obtain a personal loan is not 580. You're talking in the upper 600s, possibly even the 700s. So with more strict guidelines as far as debt goes, that has helped because debt typically gets paid back better and less default. But at the same time, we do see debt increasing substantially. Now, if we look here, savings is getting eaten up by inflation, obviously, but the key contributor is due to the higher lifestyle that has been adapted to. So if we look at how people lived pre-2020, to how they lived in early 2022, you will see a massive difference in how people spend their money. We also see the savings rate or the federal savings rate for the US has decreased and lowered to 2000 to 2010 levels, which are the lowest levels since the 1950s. Again, while debt continues to climb higher than ever historically. So if debt is going up, the savings rate is going down. In fact, it's plummeting. We are in a position where now this debt either needs to get redone or something needs to happen, because you will start to see all this debt. There's going to be a good portion where there's going to be some default. And if that happens, then we're getting into a lot more bankruptcies. And that wouldn't be good because essentially most people choose to do the Chapter 7, which eliminates the debt, and that hurts the creditor. Versus Chapter 13, which at least the creditor gets to recoup something. So all in all, with debt increasing, savings decreasing, we are in the worst position, way worse than than 2000 to 2010 levels, because our debt is higher, but also we have a lower savings rate than we do back in the 1950s. So we have, again, right now, where people had saved all that money, it has now been basically depleted. A lot of our savings, though, that again we do account for, is most savings comes from our household or our home. So if the equity is the key contributor to our savings, That just shows that right now people have actually blown or don't have any money, which could be very alarming for not just our economy, but world economies, as that probably would be a common theme with inflation and things just going up. The next thing we'll talk about is housing shortage. So the one thing about housing shortage would actually help values to stay up. So if homes continue to see some sort of shortage, again, we have seen more homes come on the market lately, but if we still see some sort of shortage, that will still ideally keep prices up. And the thought behind that is because there's still a demand for homes, the demand will still outweigh the supply. So will that be a consistent theme, or will people now be late to the market and decide to put their homes up and now flip the demand to now being the demand to sell homes and the supply to buy homes because of higher rates being lower? So that's a key thing that we should be looking out for over these next 3 to 6 months, possibly even up to a year. Another thing that would help home values and the overall economy, which would be government intervention. So from reforms to loosened guidelines and interest rate decreases, this could keep it afloat with more transactions, yet lower profit, but good to get us all out. So if we are going to see, the government intervene, a lot of times they will intervene by, again, loosening up the restrictions that we have on a lot of guidelines, or there will be some reforms that will come into the industry. And of course, interest rate decreases. So when those start to happen, that's when you will start to see, again, more transactions to be done, because consider that we have a lot of people that still want to buy homes that just don't qualify right now. But ideally, they still want to buy homes and they're just waiting to re-qualify again. So we just need those rates to go back down. Once they do start going down and we really see that decrease starting to take place, once that happens, the rates just go down. They don't go down and back up. So you'll have to give it probably about a month or so of a rate decrease and consistency with that in order for us to determine that, yes, we're in a environment where rates are now decreasing and the government has basically intervened. Again, there's that idea behind more transactions overall are going to equal more profit. Whereas if you're doing less transactions, but you have more profit per transaction, the sheer amount of transactions over here could be ×5 or ×10. So you're just going to make more money and infuse more money into our economy. So hopefully that's the case. Hopefully that is what happens. The only concern with that is how low can they take rates? Will they go down to less than 2%, less than 1%? Where will we see them to have another refi boom? Because ideally, with a housing boom, that would be great, obviously, with people purchasing homes, but that refi boom was also with it. So do we need that refinance boom as well, or are we going to just see a purchase boom and pan out? That is all to be determined, but something to obviously consider. Now we're going to talk about technology adoption curves. So finding newer technology to be adopted so right now we are finding new technology to be adopted at an extremely faster rate than that of like the color TV or the telephone. So when we see new technologies come in, we're obviously in an environment where new technologies are being created every day, that we're going to see new technologies in real estate. And as those new technologies come out, they will be adopted very quickly. This is not like a 20 or 30 or 40 year adoption for new technologies. So I would expect that we're going to see new technologies come into place. Cryptocurrency and blockchain technology ideally is projected to be adopted by 2030 by at least 10% of the global economy. Furthermore, when it comes to world currencies, ideally they're going to be crashing at some point because of sheer significant longevity. So longer than normal wear and tear is what we're seeing on current currencies. Whereas, again, the more money that you print, the more it devalues, or the more you produce, the more it devalues every single time. So just how long we've let currencies go on for all over the world, there's going to be a devaluing to that. And of course, there's other devaluation methods that have been applied. Most of them are not on purpose. But now the idea is that we would be focusing on electronic currencies for the new currency establishments. So as far as it comes from a world view, we are seeing the US economy starting their electronic currency startup. There we are seeing more world or more economies all over the world starting their electronic currencies and getting the reforms and the guidelines and everything written so that they can be adopted. And we're going to have that centralization that's tied to it. And ideally, hopefully, we'll still remain with the decentralized finance currencies such as Bitcoin or Ethereum, or maybe some other ones that will exist in the long term or into the future, but time will only tell. And then the last thing is, with people moving all around the world, the currencies will then become easier and faster to transfer, but also significantly less in fees. So just imagine, let's say someone from Nigeria moves over to Indianapolis, Indiana, and when they go and do that, they go and send money back to their home country, to their family. Well, if they're going to do that, their current process typically requires a lot of money and fees to transfer back to their country. So if they were able to do that with an electronic currency, their fees would go down and the time it would take to send that money would also become faster. So you can use that example for anyone in any other country where they are sending money back and forth. So that will also help expedite and decrease a lot of expenditures for many citizens all over the world. Now we talk about the world economy. We do see the real estate is, yes, the center of the world economy. Among other essentials, of course, oil. That's a great example. But with the growth of technology, what is going to happen to real estate? That's a question that we need to be considering for not just now, but also the distant future. Of course, we are going to see bailouts. We are going to see reform in housing everywhere. There has to be, because if we're in a position where economies are crashing and the government has to intervene, something has to take place. The governments all over the world are not just going to say, let's let our economy crash and let us crumble. They're going to do whatever they can to be able to keep their economy afloat. Now, again, pullback is normal, but they also don't want a major crash to take place either. So expect to see some things of that nature. There will also be new creations, inventions, practices, and policies that will now be adopted. So expect to see some new information that will pop out, maybe some new policies, or you'll see some new, practices, standard practices, some new inventions, technologies, whatever. You should start to see more of those roll out. And again, some of these will fail, they'll fall to the wayside, but expect some of them to kind of continue on and become normal. Again, that's normal with this day and age. We adopt new things all the time, but a lot of them have to go through a process, just like cryptocurrency. They will have to take their time, take their path, go through the process, and over time, some things, a few things will stick. Not everything, but some will. So look out for some of those new creations and practices and policies. And when those take place, to research them and develop your opinions on what will stick. Again, you typically will want to give at least a year or so for those to start to transform and take mold. But again, you want to use data as your resource. Now, all these new build and these construction companies, especially like the new build construction companies and corporations, and just most companies, as far as in the world spectrum, they will need to reduce energy. So expect that most companies, corporations, are going to need to do what they can to reduce their energy footprint. Okay, So what they're going to do is they're going to have to purchase carbon offsets to preserve our world's natural health. Okay. And this is going to be probably a big thing over the next 10, 20 to even 50 or so years. And then you will see correction happen as far as energy goes, and then they will start to go away or not be as needed. But with that being said, there's going to be some sort of carbon offset to, again, reduce our energy footprint. We're going to need that. Lots of energy is being used, whether it's, in the financial sector, it's in just, natural resources. And we need to be able to, again, unpollute the air, keep the health of our world intact. Like there's an actual need for the world health as far as, having a rainforest in the location that it's in. So in order to protect and preserve our environment, we need these carbon offsets to help us. And so companies will buy into that. So for X amount of energy used, ideally, they'll probably need to have some sort of carbon offset for that. And ideally, they'll have to purchase these offsets as part of their business. Energy improvements will be a big deal in all sectors of economy, especially with what we are seeing in housing. So maybe we will actually see some energy improvements as far as homes being built with new energy efficient technologies. And the hope is that these new homes don't continue down their route of lower quality and more expensive cosmetic route. Because right now we are seeing a lot of homes, not in that custom home sector, but we're seeing a lot of homes getting slapped up with lower quality and not meant to last nearly as long as they used to be built. So just consider that when you buy a home, don't always go the cheaper route just because it's more affordable, but consider the quality of the work being done. A lot of these homes are not, again, the standard homes that used to be built in the 1960s, 70s, 50s. The quality was it was amazing. If you go down to some cities, whether you're in Cleveland, Indianapolis, Baltimore, New York, some areas of probably Florida. I mean, again, these homes that are just older have, amazing character, but just how they were built by people's hands and the way they built them. It took time, it took effort. There was a lot to it. Nowadays, with all the equipment, all the ability to produce more, well, now people are starting to cut corners, again, which causes homes to need repairs way before they ever needed them in past time. So just consider that in your business model. Is the new home the home that you really want to buy? Maybe we do look at an older home, or maybe we do look at a renovation product. So just consider the future in some of your, when it comes to your opinion and how you make your determination. Take this information and consider the future as far as, again, your business and how you need to scale it, or what do you need to change, or what are some things that you think are going to happen. Again, I'm a huge proponent of renovation because I think renovation is going to be one of them. The data all stacks up to it. But again, what will happen? Well, we were going to see it all unfold before us because it's going to happen. But we do have a little glass eye that we can see at least into the near future in the next couple months. We do see markets crumbling. We do see needs for government intervention. We do see home values outweighing affordability. We do see debt going through the roof. We see savings getting tanked. We do see a little bit of a housing shortage still. Some homes are still coming on the market. We see technology being adopted at a higher rate. We see world currencies becoming electronic. And a lot of things to consider with all of that. So if I was looking through my eye, again, if I was coming up with my opinion based on this information, again, I want you to come up with your own opinion. If you were a forecaster, again, you would say, hey, I want you to come up with your own opinion, your own determination based on this data. But if you were looking for my opinion at that point, I would say we're probably led to a position where the government's going to have to intervene because economies are hurting. And if economies are hurting, government has no choice but to step in because they'll want to do whatever they can to keep our market steady, to keep our market recoverable. We'll see, I think the variable rates, at least for the US economy, are not a big deal. I think that's more of a worldview that we don't need to worry about here in America. I do see, as far as it being harder for new homeowners with the government intervention, they will want more homeowners. The idea of tying more people to rent is not always a great thing. But then there's that idea of keeping people in certain cycles or certain trajectories, I guess I could say. So if you're in the lower, more of a poverty level, keeping people in poverty levels, there may be government initiative for that. I don't know. And keeping, the wealthy wealthy. And then the middle class gets taxed the most. We do see that pretty frequent. But I do believe when it comes to home ownership, the government does want more home transactions because it does infuse a lot of money into our GDP. Global supply chains, again, this is just inflation. Eventually, you'll see inflation come down and those will be corrected. Economy crashes, I think some will definitely experience a crash. But will they just be able to make it seem more like a pullback? I think some companies are set up properly to be able to make it feel more like a pullback versus a crash, which is okay. That means you have things in place to be able to help stabilize things and make things a lot more at ease. Hopefully people can, in this time, utilize the savings that they had and stop depleting it or change their lifestyles back to what I would say is normal, and not through the experience of 2020 and 2021, where they might have increased their lifestyles into new ventures, spending more money, and maybe pulling back. It is alarming to see that as far as the US youth have increased from 2 million to 21 million now in the workforce. Now we are seeing more children, of age, legally allowed to being able to work, now going to work to help out the family. So hopefully more children can focus on education and we can reduce that number. Again, with housing shortage, we'll see on what actually transpires there. But again, come up with your own determination. I think we're going to be in for a little bit of a hardship for the next 3 to 6 months. Things will pan out, government will intervene. And then as far as real estate goes, it is one of the best and most fruitful careers to be in because they always need to keep real estate afloat. So I hope you enjoyed this. I hope you have a wonderful day and take care.